Yo, what's up guys? It's your boy Looney, and today I want to talk about what I think is the best strategy for trading options, and that is selling cash secured puts. If you don't know where to start with options, or if you're overwhelmed by all the strategies out there, this one is simple, powerful, and honestly, it's my favorite. But before we get into this video, I want to give a shout out to the Discord. It is free to join, and then I also offer a premium membership that's $8 a month, and that gives you access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links to that are in the description. So let's explain how it works, but I also want to show you that you can actually read about option trading on Robinhood itself. So if you go to any stock, I'm just choosing Mara, and we're going to show an example of Mara. And you go to trade options, it gives you a few things going on here, and one of them is a cash secured put. You could simply click on it and then hit the question mark, and it goes on to what a cash secured put is. But I'm going to explain it how it works in my own language and my best way of understanding it. And when you sell a cash secured put, you're basically saying that you're willing to buy whatever stock at a price. So the price that I'm comfortable with is this $14. So you're basically saying you're willing to buy a stock at a price that you're comfortable with. And for doing this, you have to lock up that cash being prepared to buy the stock at that price, and you have to buy 100 shares. So times all that by 100. And because you're doing this obligation, you get paid. You get paid upfront, and that upfront payment is called a premium. So if the stock never drops to that strike price that you chose, you get to keep the cash that you first invested into, that $14 times 100, and you get that back, but you also get your premium back too. If the price drops and it goes below your $14 or whatever strike price, you are forced to buy the stock, which you're already comfortable with at that $14, plus you still get that premium. So that premium you get up front, and it is a guarantee. You get that premium and it's guaranteed. That doesn't mean you will make a profit at the trade, but that premium is a guarantee. So that's why it's called cash secured, because you need enough cash to be able to buy 100 shares of the strike price that you choose. So if you get assigned, you'll be forced to buy it. So let me give you examples. I sort of already touched upon it, but let's look at Mara. I own Mara already, and I actually own it through cash secured puts, because once you get assigned, you can either hold the shares, you could sell them right away, or you could sell covered calls, and that's what I do. But I have a couple cash secured puts going on, a couple that are open. Let's look at both of them, and this one is expiring in a few weeks. So this one is about to expire, and if you don't know, time is on your side when you're selling. So I sold this $14 put, which means I'm willing to buy Mara at $14, and I still am. So if it continues to dip, I will be assigned. I'll be forced to buy this. But also doing this trade, I got paid up front that $54 in premium. So if Mara closes above $14 by expiration, which is in a few weeks or the 29th of August, I keep this $54 as premium, and I also get my cash back. If Mara drops below 14, I'll get to own the shares at a lower average cost because I'm comfortable with this. This is what I chose, and I like this company long term. Additionally, I already own the shares at $16, so now owning it at $14, I get to bring the average cost down. So you might be thinking, why not just wait for the stock to drop? And that's because you don't know. You don't know if the stock is going to drop, and that's why you want to get paid while waiting. So another example is OSCR, and same idea. This one is a lot safer and a lot less risk of assignment. And I sold a cash secured put at $11. I've been doing this for a little bit now. So I'm at $12, $13, and I got assigned at that $15. That's why my average cost is 14.15 is because I also got a premium. So it does price that in on Robinhood, which is very nice. So I collected this premium, and the premium I collected was $47. So pretty similar. I had to have less cash, but I also got paid pretty similarly. And same idea, if the stock stays above this price, I get my cash back, that $1,150, I get that cash back, and I also realize a gain of $47. And on the other hand, if it goes below $11, which would be very cheap, I get to own the shares at a price I'm comfortable with, keep that premium, and now I own the shares and I could wait for share appreciation, sell them right away, or sell covered calls and generate income on the other side. So that's really the beauty of this strategy. You're always in control. You're not chasing crazy lotto plays. You're not expecting Mara to jump 10 or 20%. You're simply okay with it moving sideways, slightly dipping, or slightly going upwards. And even if it does go up a lot, your only risk is that you're missing out on these gains, or that is the risk. That's not the only risk. Obviously, if the stock goes to $0, you are kind of left with no money, but the likelihood of that happening is very low. So instead, you're really just setting the terms and you're getting paid up front, and you're either keeping the cash that you have secured up, or you're getting the stock at a price you wanted anyways. So for me, I think cash secured puts are hands down the best way to trade options if you want consistency, flexibility, and overall less stress. You can do it with volatile names like Mara, like I just showed you, and you collect more premium, and even OSCR, but you could also do it with safer stocks and get less returns, but obviously less risk. But either way, you're stacking premiums while also lowering your cost basis. So one of the most important things is your stock selection. You got to make sure you're choosing something that you're comfortable owning. So if you're new to options or just tired of gambling, this is a great start. Sell cash secured puts on stocks you already want to own. Over time, the small wins will really add up. Until next time, peace.